back to Block TV. Now today I'm joined by Yoni Assia, founder and CEO of eToro. Yoni, thank you so much for joining us. Now obviously these are crazy times right now, both as a human being and as a financial market. The world has never seen a situation like this with both a mix of massive sell-offs in the market due to fear, mixed in with an almost global economic shutdown. If this were to end today, or even in a couple of months, would we shoot right back up, or is there real lasting damage being done economically right now?
Well, that's a very good question. I don't think anybody has all the answers. I would generally say if this ends very soon, we should see things back to normal somewhere between Q3 to Q4. If you look at China, supply chain manufacturing is almost back to normal. When we look at our global offices, the majority of our 850 employees worldwide are now working from home. But our guys in China, eTorians in Shanghai, are actually back to normal life, almost normal life, back to the office, most of them. So hopefully if the West, US, Europe, Israel, basically has the same process as in China, we should see things go back to normal. But there's a very big if. This is the first time, in our, I think, 100-year history where we're seeing a worldwide health crisis that has a direct impact to the real economy. Unfortunately, there are a lot of businesses, most businesses, non-technology businesses, live on margins of somewhere between 5 to 15%. So if you take 2 months out of the year and you say revenues are zero to a business where usually the margin of profitability is 5 to 10%, they basically lost an entire year of profit. If this continues 3 months, 4 months, that's 2 years of profit. So nobody really knows the impact on the real economy. We see in Israel a significant increase in jobless claims. We're supposed to see this week that data from the US. I think it was Goldman who suggested it's going to spike by 2 million jobless claims. I think that's the most since sort of recent history, at least 50 years, I think. So that impact, we still, it's very hard to measure that economic impact. So some businesses probably have already defaulted. Now there's potential for a big government bailout that could be very, very aggressive. That could help a lot of small, medium businesses or affected businesses like travel, leisure, hotels, airlines. So there's a big question of how deep a bailout is going to be and where. Europe, US, different countries will have a different type of bailout. And I think the key sort of another very big question is this health crisis moving into real economy crisis? Is it going to also become a financial crisis? And when I say a financial crisis, think about 2008 was only a financial crisis, which basically means what happens if default rates start to go up? Lenders, such as banks, insurance companies, have suddenly default rates go up to a point where their balance sheet isn't strong enough, potentially financial institutions defaulting. That's the domino effect that I think all governments are really trying to avoid. But if that domino falls, this is going to be long and painful. So again, hopeful, wishful thinking, vaccine, some solution, maybe the quarantine like in China helps. 3 weeks, 4 weeks from today, we start getting back to normal. Worst case scenario is a very bad scenario. The only thing we can hope for is even in the worst case scenario, will come out of it stronger, and recovery should be faster than, let's say, 1929, just because the world is faster, it's more connected. So even if we're going to see real impact, real financial crisis, I think recovery is going to be fast.
Mm-hmm. Now, you did mention that domino effect that could happen if default rates start skyrocketing. And in response to help stem that, governments, including the U.S., are printing money at record rates in an attempt to kind of stabilize the situation. Is this a short-term gain, long-term loss here? Do they have a choice? You know, if we do come out of this, if government debts exploded across the board, what effect will that have on the economy?
I think eventually it comes down to inflation versus deflation. I think crypto audience is the most sophisticated audience in the world. Sometimes I say that what excites me in crypto since 2011-12 is that people within the crypto space have started a dialogue that hasn't existed for a while outside of the academy, which touches about the notions of what is money, what is the value of money, how do you value monetary systems, etc. And I think this could become sort of for people within the crypto space, this could become a significant catalyst for the next crypto rally, just because money is being printed at unprecedented terms. I think, again, we're in a situation, even pre-corona, where government deficits and printing of money and quantitative easing and negative interest rates or very cheap interest rates are at a record low. And it's a very unique situation where there's very little literature around it. Whether it's good or bad is a discussion between sort of, economists, Keynesian economics versus maybe sort of less sort of stimulus economics, which is, does it make sense to print money in order to stimulate an economy? And we need to remember that because it's important, because sort of the experience of both historians and economists is in 1929, governments should have done more. That was a lot of the basis for everything we know about money today, which supported stimulus, which supported quantitative easing. 2008 crisis, main conclusion for governments was save the banks. Don't let a crisis become a financial crisis. I think if you'd ask most governments if their Lehman Brothers is about to collapse, should they enable it or prevent it at all costs? Most governments today would tell you they should prevent it at all costs. It's truly too big to fail. Does that mean that your money in any bank is safe? No, but that means probably in the biggest banks, in US bonds, your money is still safe in the regard, just like people saying one Bitcoin equals one Bitcoin, $1 is going to equal $1. Is that $1 going to equal the same amount of Bitcoin after a while, or the same amount of nuggets at McDonald's? Not so sure.
Mm-hmm. And it's very interesting because, like you said, governments are trying to figure out how to respond, both with quantitative easing, but actually the UK government just announced their intention is to actually buy British Airways shares in order to keep it afloat, buying major equity in these private companies. It'll be interesting to see what capitalism even looks like post this, if other governments follow suit in buying up or large portions of private companies, if not majority support. But many have said that a crisis, like you mentioned before, would be great for cryptocurrencies. It'd be a chance that they could show their value. Sadly, we are in that crisis now. How would you say that cryptocurrencies have responded to the crisis?
So first of all, everybody was super excited about institutional money going to crypto, institutional money going to crypto. We want more institutional going to crypto. Good thing probably that there wasn't an ETF on crypto. People who are not truly evangelists of crypto and users of crypto were the first people out of crypto right now, right? So think about a hedge fund who's managed, or a pension fund or an endowment fund, which is managing a lot of money in capital markets and government bonds and hedge funds and PEs, and then bought into that concept of buy also 0.5% of your assets in Bitcoin. What happens when you see the markets go down by 30% and oil goes down by 50%, gold even corrects down? Everybody's fleeing to the real safe haven, which is the dollar and long-term US bonds. People are even getting out of corporate bonds. They're getting out of any type of risk asset. And there's no doubt that Bitcoin is still considered a risk asset, especially for those who are not sort of advanced users of Bitcoin or just users of the actual features of Bitcoin, which is its payment network, its anonymity, the ability to custody it on your own. So what I think we saw at the beginning of the crisis, or 2 weeks when the crisis escalated in Europe, in the US, is we saw all of the non-evangelist, non-zealot investors basically selling crypto, saying that's enough for us. We'll go back to what we know, and that sort of escalated very fast. I don't think Bitcoin is a safe haven against coronavirus. I don't think anybody's thought it's a safe haven against coronavirus. It's a safe haven against, or a hedge rather than a safe haven. It's a hedge against government policy, against the devaluation of fiat across a long period of time. And a long period of time is years. It's not weeks, it's not months. That's the concept of HODL for everyone. So nobody should expect Bitcoin to necessarily go up in a short period of time. Even if they announce a $2 trillion bailout, Bitcoin is not going to go up just because of that. Bitcoin is going to go up either because people who got the bailout buy Bitcoin, which is not that likely, but maybe. But it's going to go up because it has a limited supply. It's deflationary by nature. And over time, its value versus commodities, services, and fiat money should go up because it has a limited supply. If we assume constant increase, real demand for the usage of Bitcoin. So I think it's very early to try and measure the success of Bitcoin in real crisis area because we haven't seen it yet. And I think, as I said before, I think on BLOCKTV is we should hope we don't see a spike because of that crisis. We should hope we see a long period of time of increased value for Bitcoin because of usage across the next 3 to 5 years.
Mm-hmm. Well, let's hope so. Now, switching over to your role as leader at eToro, how has this affected your operations? I mean, you're the head of a multinational company. How do you balance all the individual government rules in times like this when you're trying to pretty much, handle your employments or your employees' safety mixed with the need to continue to run the company?
So first of all, we consider our employees' safety and health first. We've been communicating with all of our employees constantly via video conferencing, via emails. We have had some sort of prior experience than a bit of other firms because we started handling the situation when the outburst started in China. So we have about 100 people in our Asian offices, And when this started early February, we had to prepare ourselves for working from home because our Chinese office basically went to their New Year's vacation and then had to stay for another 2 to 4 weeks to work from home. So we had our IT work 24/7. Actually, at some point, we sent masks from Cyprus and Israel to China. So because our offices there were out of supply, funny enough, now Europe is out of supply, so maybe they need to send it back. But we managed to sort of that it was just a smaller part of the company. We managed it. We've seen that we can operate our business where the majority of employees are working from home. And when Europe, US, and Israel started sort of escalating towards working from home, we were very well prepared as a company to make sure that we can keep all of our 850 employees worldwide operating properly from home. Of course, it's not only about sort of first keep safety and health of employees, make sure that they can effectively work from home, make sure that our systems sort of have all of the business continuity planning across our 12 offices in 12 different countries. That's also a regulatory requirement. That's why it's important to trade and invest with regulated entities. Regulators do understand the necessity of business continuity planning. They are built up exactly for these scenarios. But it's also about keeping the morale up. We're trying to communicate more internally, both with eTorians, but also with our customers. I sent a couple of emails to all of our customers telling them about the situation, our view of the markets of the situation, the risks in the situation, as well as trying to potentially find opportunities in this crazy once in 100 years event.
Well, first off, I must applaud you, Yoni, because like we mentioned before, unemployment is on the rise everywhere across the world, and I do salute you for trying to find ways to enable your employees to continue working. Now, trade-wise, how has this state of affairs, affected you guys? You're a trading platform. Is all volume good volume for a trading platform?
Generally, all volume is good volume for our business. Of course, we are more happy to see volumes at tiding markets rather than bearish markets. So even from the name of the company, eToro, we're bullish around the markets. We believe in the stock markets. I had that very much notion strengthen when I met Warren Buffett, sort of escalated significantly how much I do believe in capital markets, and then for the long period of time, the markets should go up, and it's a great opportunity to invest in capital markets. Obviously, it's very challenging to run basically a trading platform, an investment platform where markets are bearish, where volatility has significantly increased. The risks of trading and investing have increased significantly, but so have the interests, customers' interests, client demands. I'm sure everybody watching BLOCKTV has 5 WhatsApp groups talking to friends, and all of their friends asking them what to do with the money. Should I sell my stocks? Should I buy more stocks? Have we bottomed? Should we buy now? Is crypto really a safe haven asset for this situation? Is it a hedge? Should I buy it? What's going on with oil, which has just added oil into the fire? Suddenly so volatile, increasing uncertainty. How come gold is going down versus up? So there are a lot of questions. Anybody that's interested in the markets now also has more time at home to log in, to look at the markets. And generally, I think it's a good thing for people to be interested in the markets, involved in the markets, but people should be also extra cautious at these volatile times with managing their funds and understanding which pockets of risks are they trading and investing with.
Now, lastly, you do have a unique insight because eToro isn't just an investment platform, but also a social trading platform. Now, have you found that people are actually changing their social trading behavior in these wild times, whether more or less willing to shadow someone else's trades or following different people? Have you have any insight on that?
We've seen some really amazing stories of some of our popular investors. So we've seen, I think, last I checked, we have about 162 out of about 1,000 popular investors who managed to stay profitable so far this year, which is quite extraordinary if you think about a year where Dow, S&P, Nasdaq, and European stocks are on average down somewhere between 25 to 35%. So in the dialogue, the number of conversations in the platform has peaked to all-time high. The number of messages, how people are communicating with one another. So I think what we are seeing is people more interested in enabling a dialogue, in conversing with others, and they are super interested. And that's why, by the way, probably something objective to say about the situation. Anybody should be interested in who are the people, who are the investors who manage to actually make money out of the situation. Is their strategy consistent? Does it make sense? And at least learn about it. There are a lot of investors on eToro who are really looking for opportunities. And again, anytime that the market goes down 30%, opportunities start to reveal themselves. But I don't think we've seen the end of this yet. I think we're going to see more volatility in at least the next month to month and a half till we see Q1 results and have better visibility on Corona, which means the markets right now, probably capital markets as well as crypto markets, are very turbulent. For people coming from crypto into stocks, at least they had a very good experience in how volatile markets can be.
Exactly. This is just an average day for us, sadly. Last question, for people who are new to trading, like you mentioned, who might happen to have capital laying around, or for those who do already have a lot of skin in the game, who might fear they'll lose their life savings in all this, what opportunities does this very unique situation hold?
I think, first of all, the big opportunity is just generally lower prices of stocks, even potentially oil. The oil has a carry into it because it has carrying costs. So it's not that easy to invest long-term in oil as it is in stocks. So I think gradually there are more and more opportunities in the stock markets. Anybody who's interested in investing in the markets should be, though, very careful. So people should be investing gradually. So if you want to get into the markets, you should do it gradually. If you found a specific stock and you want to invest X amount in it, don't invest X, invest 25% X. And 2 weeks from now or a month from now, another 25% X. So don't go all in because the markets might go lower from here. But if you look at stocks like Google, Apple, Facebook, who have gone down, I think, from all-time high, probably somewhere between 15 to 25%, then in the medium, long period of time, I think those businesses, technology businesses, are going to do well. So in general, I think we're going to see healthcare and tech taking a bigger part of the S&P. I think there are opportunities because I think those businesses will just improve and actually scale within the next 3 years. I think we're going to see our parents and grandparents use the internet more because they have to use the internet now. People will use delivery services more because everybody now needs to learn how to use delivery services. I think there are also opportunities in other industries. Financial companies have been hurt significantly. Some of the large banks gone down by 50% or more, in Europe, even worse. And obviously, in some cases, companies have sort of slashed 60-70% of their value, like travel, restaurants, etc. But these are very risky trades because we don't know when this ends. And it is important for people when they look at stock to also understand not only PE. So we are used to a world where companies pay their debts. They raise money through issuing debt, but in a normal course of business, those companies know how to pay their debt. In very volatile times, recessions and worse, suddenly the debt owners become the equity owners. So you can look at a stock and say, that's interesting. Their 2019 PE price to earnings looks really good compared to 2019. It's, I have a thesis 2021 is going to look the same. So I'll buy this stock. But if you don't look at how much debt and the maturity of that debt, you might find out that the stock is actually worthless because the actual owners of the company aren't the equity owners anymore. They're actually the debt owners. And since, as we started this conversation, we don't know whether this is going to become a significant financial crisis. In eras, in times of financial crisis, there's also a significant credit crunch. Companies can't raise capital to revolve their debt. So it's becoming more complex to analyze opportunities in the markets. And if you do want to go into fields where you understand less about the companies, you should research more, read more, or talk to people who do that work for you.
Well, Yoni Assia, very crazy times we're going through, but it seems like this crisis is bringing traders together. Thank you so much for joining us, Yoni, and I hope that you stay safe and good luck. And for all our viewers at home, if you want more on blockchain, crypto, and technology news, make sure to check us out at blocktv.com.
Stay safe, keep healthy.
Watch us on Amazon Fire TV and Roku.